Good morning and happy Monday, themarqueeteam.com. Andrew Marquis, CrossCountry Mortgage. Hope you all had a great weekend. Checking in here this Monday with our market update and interest rate update for the week. Market has been steady. I wouldn't say crazy, but I would say still a good amount of business coming in despite it being the holiday season. We're still getting a good amount of pre-approval inquiries. The Fed did cut rates last week, which was great. Short-term rates, mortgage rates have kind of, I would say, remain somewhat flat, but we do anticipate hopefully that they'll continue to kind of trend lower as they have been over the last 12 months. But here's our rates for the week. So 30-year fixed, conforming 1 point, 5.99. 20-year is 5.75. 15-year 4.99. 7-year arm 5.625, and 5-year arm 5.5%. Moving on to jumbo, $807,000 loan amount or greater with 1 point, 30-year fixed 5.875. 10-year arm 5.625, 7-year arm 5.25, and 5-year arm 5.125. So we talked a little bit about what the market's doing and what's happening next year. We had an interview with our CEO last week, and he was sort of going over projections on rates, on mortgage volume. And what we see generally looking like next year is a 20% increase in mortgage volume. We did see a 20% increase in 2025 compared to 2024. And it sounds like we're going to see another 20% increase in 2026. More buyers in the market, more sellers in the market. A lot of interest rate predictions. I did see some last week that were saying rates would remain flat, high fives, low sixes throughout 2026. I'm a little bit more optimistic and bullish about that. I feel like the Fed is going to cut rates another 0.5 to 0.75%. So I'm going to predict that we are going to see a similar impact in the mortgage rates, where I think by the end of the year, we could see a 0.75% reduction, and maybe at slower points during the year, a 0.5 point deduction. But again, I'm bullish, I'm optimistic, no guarantees here, but I think we are moving in a favorable way in terms of interest rates. We're not going to see rates go from high fives to 3% like we did during COVID. That's not happening again. But I think to see some minor incremental improvements over time makes sense to me based on what the Fed's doing, based on what's going on politically, based on a softening economy as well. Jobs reports are coming in a little bit weaker. So anyway, should be a great year ahead. We keep gaining momentum year after year, and I think that will continue in 2026. Just a reminder, we're in a bit of a balanced market. So if you're working with buyers, there's great opportunities out there right now for buyers to have less competition, do a home inspection, have a mortgage contingency, not have to go 20% over the asking price. So if you're a buyer, this is a great time of year to be looking. So if you need pre-approvals, you have questions, reach out to my team and I anytime. Again, themarqueeteam.com, and wishing you all a happy holidays. Thanks so much.